Year low. Let's bring in Cole McGill, Vice President of Research, Metals and Mining at Stifel, who covers the lithium miners, to talk about this. You've got three ideas on the long side, but I first want to talk about why we've seen such problems over the past year or two with the sector.
Yeah, good morning, Amber. Thanks for having me. It's great to be back. So it's interesting, right? Because if you look at the space, there's the supply side and there's the demand side. And on the demand side, things remain strong. With respect to EV sales, they're up about 40% year over year in China, and effectively the big three, China, the US, and Europe. But you've also seen a lot of supply units enter the market that really wouldn't have been there last year due to price. And that's kind of what's brought down...
Meaning price went up?
Yes.
And so everybody says we're going to mine this stuff?
Yep.
Okay.
Yep. So there's a lot of different lithium units, direct shipped ore, lepidolite sources coming out of China that have effectively come in and helped bring down price over the past, call it, 6 months or so.
So which could be good if you're a consumer because this could help on affordability?
100%. Yeah.
But if you're a miner, a bit of a problem. How do you deal with that?
Yeah, there are some cost-cutting measures that you can do, but still I would say that margins on average for most of the incumbent producers are still very, very robust. You saw a lot of the Q2...
Like what? What's like general levels?
Anywhere between 40 and 50% still.
Okay, yeah. Okay, so not slim margins. Let's use an example. Lithium Americas is your first idea here, and this is one that is bouncing off of definitely a 52-week low. It looks like around a 2-year low here. Did it just come under pressure because of the price situation?
That and amongst others, but what's interesting with Lithium Americas is that they're going through a bifurcation of their asset base, so they're actually going through a demerger as we speak, what's supposed to occur mid to early October. They want to have a clean Q3 or Q4.
What are they splitting?
They're splitting their asset bases, so they're splitting their Argentinian business with their North American business.
Why?
And their North American business is what's really interesting because of the partnerships that they've been able to involve.
Yes,
that's the one with the GM $650 million investment, as well as they're looking to get a sizable loan from the U.S. Department of Energy that's trying to catalyze the onshoring of supply chains.
So then your price target is $37 US.
Yep.
That's very high compared to where it's trading right now. So could be a big success. We've seen it trade there before, so you're not asking it to go somewhere it hasn't been before. Is that the catalyst, the splitting, or are there other things?
I think that's the largest catalyst.
Yeah. And
the way you can kind of think about it too is that there have been a lot of acquisitive bids for these lithium assets in Western Australia, like Liontown from Albemarle. Albemarle also invested $109 million in Patriot Battery Metals earlier this month, and then also SQM. So you've seen a lot of the incumbent producers use a lot of that cash they generated through 2022 to be acquisitive, and I think we could see that happen within the Western Hemisphere as the U.S. tries to incentivize local supply chains ex-China.
Possible takeout candidate then is...
Potentially.
Okay, all right, potentially. Lithium ionic, that's actually held in pretty well. Why is that?
I think there's a tight register. It's a solid management team, but also it's, in my eyes, had a very robust dual-track method of value creation. So there's obviously the potential for a takeout. It's close to Signal Resources. Tesla has been rumored to be in the area as they try and secure feed for their Corpus Christi refinery in Texas. But also, they've been really, really acquisitive with respect to their land holdings, as well as how well they've been able to grow their resource base within Brazil.
In mining, the no premium is sort of a vogue in gold. Do you expect that will be a different case in lithium? What kind of premiums do you think? Do we have any comps to look at?
100%. So Albemarle went after Liontown Resources back in March. That's an Australian-based asset that's relatively close to their current Greenbushes asset. That came in at around a 69% all-cash premium bid when Albemarle went after Liontown. So there is the track record and then the proven comparables that these assets could be taken out at a much higher premium.
Okay, so in copper, there's all this interest in M&A because supplies are so low. We're not, mining any more copper, but you're telling me there's this abundance of supply in lithium. Could that not blunt the catalyst that is M&A?
It really could, but I think what you're seeing and what's really interesting within the space is that lithium is becoming increasingly geopolitical. The westernization of supply chains, China still controls the majority of lithium refining. So earlier we saw that China reduced exports of germanium and gallium back in the beginning of July. That was kind of the shot across the bow with respect to the lithium industry, as people saw, well, you have around 66% of lithium refining capacity in China. How is the U.S. and how are Western countries going to try and onshore those supply chains? So that's kind of the geopoliticalization of the asset bases that we're seeing.
Your final stock, which doesn't look like based on your price target you see as much upside, but a little bit here, is Frontier Lithium, which has rolled over.
It has. And that's due to some issues surrounding infrastructure. But I think at the end of the day, those who have the rock win in this industry, we've seen acquisitive targets throughout different types of vertical capital, entering the space. So automakers, as well as battery refiners and battery material builders. We've also seen it from the likes of big oil as well as diversified mining companies, because I think what you're seeing is that lithium is becoming increasingly relevant within the size of the industry, right? So with Frontier, they have the third largest deposit in North America. They have the second highest grade lithium deposit in North America, and it's a spodumene or conventional hard rock asset. So I think those are types of traits, as well as being high grade, low strip. There's a lot of physical characteristics about the asset that make it a prime target.
And you're talking about a lot of different types of buyers, not just other big miners, maybe the car manufacturers themselves, but then also energy company, like an oil company looking to diversify. Have we seen that yet?
We have. So Exxon recently announced a $100 or $120 million acquisition of acreage close to where Standard Lithium's property is in the Smackover. They have lower grade brines, but they're conventional in the sense that you can effectively extract the lithium through direct lithium extraction technologies. And so you're seeing Exxon, Chevron, other oil companies like Imperial in Canada and E3 all try and enter the space as lithium becomes increasingly relevant.
All right. Thanks so much. That's Cole McGill joining us for today's Hot Picks.